So, the company that 20 years ago came up with the idea of launching space rockets on an abandoned, overgrown site in the middle of Texas fields has gone public. The company that blew up one space rocket a year for 3 consecutive years during launches. The company that had only a couple of weeks' worth of funds left. The company that, to save on aerospace components, didn't buy a nozzle drive for $120,000 but created it themselves using a car wash valve for $5,000. SpaceX is going public with a valuation of $1.8 trillion. That's more than almost all companies in the world. It's going public with a multiplier of 92. This has never happened in history before. This is Lyadov Pro Business, and today I'm figuring out whether it's worth investing in SpaceX right after the listing. This is probably the first IPO in history where, among the SEO requirements, there's a point: build a colony on Mars and settle at least 1 million people there. I've gathered 10 authoritative opinions from investors, including those who have already invested in SpaceX, as well as analysts, fund managers, and the world's largest financial publications, to understand what advice they give to invest or not. And most of them give a completely different answer than many expect to hear. This is Lyadov Pro Business. Subscribe. Here we invest together. On the first day of trading, the company's shares gained 30% at one point, increasing the valuation to $2.3 trillion and making Elon Musk the first paper trillionaire in history. A phenomenal result. What happens next, we'll see. Because by the close of trading on Friday, the shares rolled back by 10%. And the main question is, where will the price go next? So SpaceX is offering shares worth $86 billion. Is that a lot or a little? In terms of money, it's a gigantic figure. It's simply the largest in history. It's 3 times bigger than the previous largest offering by Saudi Aramco at $29 billion. Larger than Alibaba at 25, SoftBank more than 5 times bigger than Facebook's offering. But in percentage terms, SpaceX is offering less than 5% of the company in the IPO. And that's already little. For example, Facebook offered 16%, Google, 19%, Tesla, 13%. Moreover, retail investors will get even less from these 5% to 20% of these 5%. That is about 1% of the entire company. It turns out the news is big, but the shares issued are less than 5%. This is called a small free float, and it often means that they create an artificial shortage when they want to boost the stock at the start. It creates a paradoxical situation. There are many who want to buy, but very few shares. And here, let's talk a bit more about the 20% of the IPO given to retail investors. There is data that it could be even 25 or 30 compared to the usual 5 to 10. This is almost unprecedented for a mega offering of this scale. Usually, the main part of the shares goes to pension funds, sovereign funds, hedge funds during an IPO. That's how it almost always was. But SpaceX decided to do the opposite, and Elon Musk explains it very simply. This is very important. He wants the widest possible public participation. That is, for millions of people to become company owners. Sounds very nice. Because think about it, SpaceX is not just a company. There's nothing like it on the stock market. Everything else is just deadly boring. Reports, forecasts, these endless numbers, growths, revenues, declines. But SpaceX is romance. It's just rock and roll. Imagine daring guys who build a space rocket with their own hands. Several times it crashed. Despite this, they found even more people, invested even more money, and it flew. NASA started ordering flights from them. And now they say they'll settle people on Mars or already on the moon, which is kind of unbelievable, right? This is a bet on something incredible. This, my friends, makes your eyes light up. It's like you're climbing into the spaceship with Musk where he promises to take you to space. Buying SpaceX shares gives you this feeling of being part of exploring a new world. It's priceless, my friends. I don't think any other stock on the public or private market can offer this. It's worth much more than investing in, I don't know, some ExxonMobil and waiting for oil prices to rise. Yes, very predictable. Yes, it's probably profitable, but boring. But SpaceX is just a bundle of energy. And it's also a cool tool to reach a new audience of investors. Everyone up to, I don't know, Jack from the pub, who will tell the guys over meat that he's actually financing the exploration of new planets now. How much he earns from it isn't that important. It's just a new brand, a new idea that was only written about in books before. It's even easier to attract money from very wealthy IT professionals around the world, by the way, quite young guys who have accumulated a lot of money and want to invest. And for them, Musk's name is comparable to, I don't know, a modern genius. And you know, friends, it works. According to the New York Post, applications from retail investors alone have already exceeded $100 billion because the entire IPO volume is exactly $86 billion. So retail alone has already submitted more applications than the entire offering size. Even more interesting, Australia, the largest broker, CommSec, reported 30,000 applications from Australian private investors. And they even closed the acceptance of applications early because there were just too many people interested. Moreover, most of them are young investors attracted by the name Musk and the space theme. Vanda Research confirms this theory. They note that before the SpaceX IPO, retail investors began massively selling popular AI stocks and accumulating cash to participate in SpaceX offerings. They haven't seen anything like this since 2020. So if you look at the IPO through the eyes of an ordinary person, not immersed in daily analysis, there's nothing more promising in the world from their point of view. It's like, I don't know, a new wave of AI. It's like a new Bitcoin. It's like a new, I don't know, a new religion that's massively capturing people because it sounds damn attractive, right? Moreover, how can you not believe Musk? First of all, he's already done the impossible more than once, and it's actually written in the documents. To get the main stock package, the company must reach a valuation of $7.5 trillion and create a permanent human colony on Mars with at least 1 million people. That's the population, by the way, of a city roughly the size of Birmingham or San Francisco. Musk also has to build 100 petawatts of computing power. That's about 30 times more energy than our entire planet consumes today. Musk also has to build a global space internet on Starlink, develop space logistics, that is, lay down the equivalent of 19th century railroads or 20th century container shipping to transport goods between Earth, the Moon, and Mars. And most importantly, Musk has to build space data centers. And here's where you need to pay attention, because the development of AI will soon hit an energy shortage. We all know this. In space, the efficiency of solar panels is higher. There are no clouds, no night, and that's a really big advantage. The idea is this: Starship launches huge computing complexes into orbit, powered by solar panels. Cooling in space is potentially much easier. There's no need to build giant data centers on Earth near power plants. The idea sounds so viral that you're just like, wow. Of course, I want to invest in space data centers right now. You all here building some Amazon AWS, some Nebius? Yeah, we want to go straight to space. But then you immediately rush to check how feasible this really is. You run into the fact that there are many problems. First, to get 1 megawatt of computing, you need to launch solar panels, batteries, radiators, structures, communication, and the servers themselves into orbit. Recent calculations show that to compete with ground-based data centers, the cost of launching and production must drop several times compared to today's Falcon 9 prices. Data transmission is a huge problem, and it's still unclear how to solve it because you need to transmit petabits of data in video streams, texts, data sets endlessly. And you need to do this with minimal delay. Even modern satellite channels are actually much weaker than fiber optics on Earth, and for training models on the scale of GPT, this is a critical downside. And another important point, electronics in space degrade quickly. This means you need radiation-hardened hardware, which is much more expensive and slower than regular server chips. So putting a regular GPU there is simply impossible. There's another point, the complexity of repair and maintenance. On Earth, replacing some chip, cable, or module is just an hour's work for an engineer. In space, it requires a robot or a manned mission. Of course, all this is solvable, but will it be worth it, at least in the next 10 to 15 years? That's the question. But the price of SpaceX stock already essentially assumes that this is not just possible, but already achieved. For the current valuation of SpaceX to seem justified, the company must grow its revenue by about 180 times over the next 14 years. Meanwhile, the company currently has no profit and revenue is $18.7 billion, of which 61% is Starlink, 22% is rockets, contracts with NASA, and only 17% is AI. And let's admit, their artificial intelligence lab is still far behind Anthropic, Google, and OpenAI. And this is very important. The most promising direction currently looks the weakest. Perhaps understanding this, Musk merged SpaceX, XAI, and X, which was formerly Twitter, shortly before the IPO. As a result, an investor buys not just a space company, but a much more complex structure. Meanwhile, XI, which Grok is actively burning money, and X itself, which was formerly Twitter, also remained a loss-making asset for a long time. That's why the Financial Times calls the company's structure a confusing corporate structure. Confusing. And here's perhaps the most unexpected part. A large group of institutional investors issued an official warning about SpaceX. Their main thesis is this: high valuation, extremely small free float, and a management structure that practically deprives shareholders of influence over the company. In other words, simply put, by buying SpaceX, investors are betting not on the board of directors, not on the corporate control system, but on one person, Elon Musk. And then everyone makes their own decision whether they are ready to bet on the richest and perhaps the luckiest person in the world. Well, that's my personal opinion. And now, finally, to the opinions of authoritative sources on whether it's worth investing in SpaceX right after the listing. The Lex column in the Financial Times, which is not averse to elements of irony and sarcasm, poses the question. And why not include SpaceX stores on Mars, banks for Martians, and the end of all wars in the market? But seriously, Financial Times analyst Louis Lucas writes that SpaceX estimates its potential market at about $28.5 trillion. But what if even that number is too small? When Amazon, for example, went public in 1997, the company claimed its market was book sales, and the market was then valued at $26 billion. It sounded huge, but today, Amazon is worth about $2.5 trillion and sells just about everything. The same happened with Facebook and many others. It's the fate of great companies to open new markets where none were visible before. And so why not consider moving part of the industry into space? Why not consider resource extraction beyond Earth? The author doesn't give recommendations on whether to buy stocks or not. He rather boldly and ironically reflects, but his attitude is definitely bullish. The largest technological revolutions often create markets that no one can accurately predict in advance. Analysts believe the market values the company at about 2.2 times more than their fair value, meaning not 1.78 but 0.78 trillion. Interestingly, even in Morningstar's valuation, AI accounts for only 170 billion, while the market actually adds almost another trillion of future value. Another opinion: Barnes believes that SpaceX is an outstanding company, but that doesn't mean it should be bought immediately after the IPO. The company trades at extreme multiples relative to current revenue and profit, and history shows that the largest IPOs often disappoint investors after the first weeks or months of trading. I'll add that this was the case with Facebook. The IPO went at $38 per share, and they fell by more than 50% within a few months. Uber at one point had shares worth $18, with capitalization dropping by $6 billion in one day on the IPO day, the very first day of trading. Lyft minus 35% at IPO, Snap minus 25%, but to be fair, there were reverse cases too. For example, Google started after the IPO at $85 and was worth $300 per share within a year. Microsoft, after the IPO in 1986, friends, they had an IPO, shares almost immediately began to rise. And of course, Tesla, which started around $17, stayed in that range for a while, but eventually grew many times over. The next opinion: Business Insider surveyed 8 professional investors, and only 2 of them are ready to buy at the IPO, while 6 prefer to wait or not participate at all due to valuation and expected volatility. The CIO of Western Alternative Strategies, Dhruv Manikhtala, considers the company excellent. By the way, he already invested in the company in 2019, and now he says he's more of a seller than a buyer. He's not ready to buy at the IPO price. The reason is simple. To justify the current valuation, SpaceX needs to increase revenue by about 30 times in just 4 years. The next opinion is from Campbell Harvey, a finance professor at Duke University, who believes that a small free float, those are the shares released to the market for retail investors, and forced purchases by index funds can artificially drive up the price after listing. But for an investor, this is an argument to wait until the hype subsides. I understand that because when the hype is artificial, it always subsides sooner or later. By the way, regarding index funds, indeed, shares will automatically be bought by the QQQ, FTSE, Russell, and CRSP indices. Moreover, NASDAQ even changed its rules. For example, because there used to be a minimum free flow threshold of 10%, and SpaceX, I remind you, has less than 5%, but NASDAQ made an exception for Musk and will still buy them. That means the indexes will automatically buy SpaceX shares worth almost $16.2 billion. That's why, by the way, there's such confusion, because overall they are bringing 74 to the APO, plus 16.2 specifically bought by the indexes, and in total it comes to about 86. It could have been more because they could have also bought S&P. It would have turned out that the indexes would have bought a total of 30 billion, but S&P, unlike NASDAQ, refused to change the rules, saying they only take profitable companies, meaning SpaceX won't be able to join until at least 2027. Next opinion. Rupert Mitchell from Blind Squirrel Macro called the decision to allocate an unusually large share of the IPO to retail investors alarming. Historically, such deals are often accompanied by strong speculation. Exactly what I was talking about. When people, non-professional investors, start getting shares and react very emotionally to movements, chaotic volatility occurs. Another opinion. Forbes warns about the so-called Musk effect. This is when huge expectations, a cult of personality, and the complexity of fundamental valuation can lead to significant price fluctuations after trading begins. Business Insider also compares the situation to Facebook's IPO in 2012. Back then, a great company, but the initial valuation was too high, and as a result, it led to a painful drop in shares after the placement. The Guardian cites experts' opinions that the risk of technical failures, competition regulation, and Musk's full control remain very significant, and therefore investing is only worthwhile as part of a diversified portfolio. The Motley Fool takes a more positive stance. From their theses, they mention that Starlink alone could already be worth hundreds of billions of dollars, and SpaceX has unique assets that no competitor possesses. They consider the purchase justified for a long-term investor with a horizon of 10+ years. Some market strategies, including Michael Mongan from ETS founder, believe that demand will be so high that the IPO could show strong growth in the first week of trading. And this is an argument in favor of buying immediately if the goal is to profit from momentum in the short term rather than fundamentals. And personally, my opinion, I believe that maybe not immediately, maybe with small or even large pullbacks of several percent down, but the stock will soar upwards. Regardless of the quality of the reports, I see this with Tesla, which has had declining sales for several years in a row. Their reports are far from the best. Moreover, they are losing the race to Chinese electric cars, yet Tesla's shares are moving forward. And my opinion is that they are sustained not so much by the reports as by the figure of Musk himself, who seems unable to lose anything in this life. Because even if he formally loses something, he still gains such a following and influence that people follow him. And these are the followers who are today's main asset. And perhaps here, of course, is the key point. What could be more important? People's faith or people's calculation? Of course, if you calculate everything by the numbers, how many times they need to increase their revenue, it looks insane. But perhaps sometimes we underestimate the emotionality of our decisions and those around us. Think about it. This was Lyadov on Business. Thank you for watching. Subscribe.